Welcome to Dinar Trend Tracker channel. Did you hear that two currencies have the potential to alter the way investors see money and disrupt the global financial system by tomorrow morning? It is not a myth or apocryphal. It's a fact that is still evolving. Many experts are hailing the current situation as the currency event of the century, and it is centered around the Vietnamese dong NDE and the Iraqi Dinar IQD. These are no longer minor players. In a manner not witnessed in decades, economic factors, governmental reforms, and changes in global markets are all converging. Shocking projections are circulating. While the dinar might reach 4.92 per unit, the dong could reach 2.60 per unit. Gains that could change people's lives could result from that kind of action. Yet what is genuine? Is it mere conjecture? And after this, what will happen? If this financial explosion doesn't happen as soon as tomorrow, you'll want to stick around till the end because we're revealing the whole truth about it today. One currency that has been patiently waiting for this day to arrive is the Vietnamese dong. Vietnam is now one of the most rapidly developing innovation hubs in Asia, having evolved from a low-cost manufacturing foundation. Despite widespread economic weakness, the country's gross domestic product, GDP, has grown by more than 6.5% annually over the previous 5 years. The section that is most often disregarded is this, though. There has been a near 400% increase in Vietnam's manufacturing industry since 2020. Many well-known companies have set up shop there, including Nike, Apple, and Samsung. For the sake of improved production, stability, and inexpensive labor. A significant change in economic power has occurred. The State Bank of Vietnam has been quietly boosting the country's foreign reserves, which have increased by 300% in the past 5 years and are currently estimated to be over $100 billion. Government control, stability, and leverage are conferred by this. A rapid and natural appreciation of a nation's currency is often the result of such measures taken to fortify its reserves and infrastructure. The change in Vietnam is strategic as much as it is economic. To increase exports, the government has now unveiled a $50 billion national infrastructure plan that will build digital smart cities, upgrade ports, and construct new high-speed rail networks. These building projects are not little undertakings. They are growth accelerators with the long-term goal of establishing Vietnam as a major trading center in Asia. The move is reminiscent of what China did 20 years ago, before the yuan became very powerful internationally, according to analysts. Further, the groundwork for a significant revaluation of the currency is laid when that is coupled with increasing investments from outside. Global investors are keeping a careful eye on the Vietnamese dong because many of them think the currency is about to undergo a huge correction that might cause a significant revaluation of the dong relative to the dollar. Iraq, a nation whose economic potential has lain dormant for years due to recovery and restoration efforts, is the focus of our current discussion. What is happening in Iraq right now, though, is completely unprecedented. After years of devaluation, the Iraqi dinar is now displaying indications of resilience, reform, and rising faith from around the world. There are 5 times as many proven oil reserves in Iraq than there are in any other country. The potential wealth represented by those 144 to 5 billion barrels is in the trillions of dollars. Iraq has just inked oil export deals with India and China that will last for decades. This deal guarantees stable and high-value exports for the next 20 years, which means a constant influx of foreign cash. Historically, countries who obtain long-term commodities contracts see a major strengthening of their currencies. The key difference now is that Iraq's economy is dependent on more than just oil. Its monetary system is now being updated in a serious way. Few international investors are aware of the changes that the Iraqi central bank has made behind the scenes. The significant progress in reducing inflation from 15% to 3% in the last 18 months is a clear indication of improved monetary control and economic discipline. More than 40% of the country's foreign debt has been paid off in the last 2 years as well. An increase in the value of the dinar and an influx of foreign investors are both resulted from a reduction in debt. Perhaps most significantly, Iraq has been developing closer ties with organizations such as the International Monetary Fund, IMF, which has been providing guidance on contemporary monetary policy to Iraq. The value of a country's currency increases whenever the International Monetary Fund backs a program of financial reform. Iraq is pursuing a well-defined plan that has always been followed by countries before they experience major currency appreciation events: stabilization, diversification, and international collaboration. You may be wondering why these adjustments are critical at this time. Time is of the essence in international finance. A rare opportunity has arisen in the restructuring of global trade, and both Iraq and Vietnam are taking advantage of it. The majority of the world's economies are shifting their energy and industrial linkages to developing areas rather than the old power centers. A new global manufacturing powerhouse is emerging in Southeast Asia. Along with the Middle East being an economic powerhouse that relies on more than just oil. Both the dong and the dinar are caught in the stream of this change, which causes ripples in the currency markets. Financial institutions, investment businesses, and sovereign funds are starting to build up holdings in both currencies. Institutional buyers typically act on information that the general public lacks, such as statistics, predictions, or governmental actions that indicate a big shift in the financial sector. For a better understanding, let's dissect some numbers. Vietnam is expected to have one of the best performing economies in Asia this year, with a GDP growth rate of 7.2%. An increase of 35% in export revenue over the past year indicates a greater influx of foreign currency into the country, which is a strong indicator of currency appreciation. In contrast, thanks to enhanced safety measures and innovative extraction methods, Iraq's oil output has surged by 25%. The support of the dinars is strengthened with every fresh oil shipment, which provides billions of dollars in foreign reserves. This data is not based on conjecture. These data demonstrate actual, observable improvement. When both countries are working to reduce their debt, increase their exports, and form global relationships, it shows that their economies are well aligned. The kind that typically comes before a big revaluation. Keep in mind, though, that currency bursts don't occur out of the blue. Typically, the first signs to arrive are those that are quiet. On long-term trade charts, both the Vietnamese dong and the Iraqi dinar have displayed strong technical patterns. Several levels of resistance that had been in place for almost a decade have been broken by the dong. However, the dinar's value relative to other major currencies in the region's markets has been steadily increasing. As traders position themselves for a larger move, these are early signs of confidence. A bullish breakout pattern is being formed by these currencies, according to analysts. Sharp price increases might happen in a few days or even hours after that breakout finishes. Like a coiled spring, it remains silent for a long time. But prepared to unleash immense power when the economic stars align. Looking at past events might give us a good idea of how quickly these changes can occur. A day after the Swiss central bank's unexpected announcement in 2015 caused the Swiss currency to surge 1%. One of the most spectacular overnight changes in modern currency history occurred when the British pound was affected by the Brexit result. These examples illustrate how the currency markets react to policy, speculation, and worldwide reactions with rapid bursts. Now we need to know if the Iraqi dinar and the Vietnamese dong are on the verge of their own breakthrough moment. The evidence is the circumstances are ideal for a revaluation event to occur, since both nations are executing robust reforms, reducing debts, growing industries, and increasing exports. Growth is just one part of Vietnam's narrative. The theme is metamorphosis. The country has transformed into a regional superpower after formerly being a developing economy. Smart cities, technology parks, and manufacturing powered by artificial intelligence are becoming realities. These things are the way things work in action. Digital strength equals economic strength in the 21st century, and the country's leadership knows this. Vietnam is creating an economy that can adapt to the future by emphasizing digital banking, smart trade systems, and blockchain integration. This degree of modernization always serves as a signal to investors that the emerging nation is open, stable, and prepared for substantial financial expansion. A currency's value might be boosted just by the confidence of investors around the world who are eager to join in on the action before it starts to appreciate. Many people still link Iraq with instability, so the country's improvement may come as a surprise to them. Nonetheless, a different economic truth is beginning to take shape in that region. There are currently enormous building projects in both Baghdad and Basra. The United States' physical layout is changing due to the construction of new power plants, highways, and airports. Secretive investments in renewable energy, telecommunications, and agriculture are being made by multinational corporations. Iraq has a well-defined goal: build an economy that can support itself without relying on oil. Diversification usually leads to a stronger currency basis for nations with some of the world's finest natural resource bases. The Iraqi administration is aware of this. They have gone to great lengths to entice direct investment from abroad, update their financial infrastructure, and connect international payment networks. Such behavior does not characterize an economy that is not growing. What these things represent is a country getting ready to make a financial recovery. It should be mentioned that investors from around the world are attentively monitoring these developments. Adding Vietnamese and Iraqi assets to their emerging markets portfolios is supposedly a strategy employed by large investment funds. It is usually not a coincidence when large funds diversify into certain countries. Data, insider analysis, and policy insights typically form the basis of this confidence. Additionally, smaller investors frequently join larger ones as institutional capital starts to pour in. Improving demand and increasing value, this domino effect can swiftly turn sluggish markets into major participants on a global scale. This has occurred previously with other developing nations, such as China, South Vietnam, and Iraq appear to be experiencing a similar trend of forces converging. Assuming these revaluations materialize as expected, early holders may witness returns that reshape generational fortunes if the Vietnamese dong genuinely reaches 2.60 per unit. Some experts predict that the Iraqi dinar will reach 4.92, which would be the largest appreciation event in recent economic history. Although these figures appear enormous, they are not insurmountable in light of the economic foundations that are being established. Both nations are increasing their exports, bolstering their reserves, and connecting to global networks. Currency strength, often a dramatic increase, has always followed these circumstances in the past. Naturally, risk is an integral part of any financial narrative. Although foundations are solid, external circumstances like as war on a global scale, shifts in policy, or unexpected market fluctuations can cause currency markets to fluctuate wildly. That's why, before putting your money into any foreign currency, it's crucial to conduct your homework and talk to specialists. Despite the dangers, the dong and dinar are clearly making progress. Many investors aren't in it for the They are changing the game when it comes to international cooperation and strategic planning for smaller economies. Both currencies may reach new valuations in the near future, perhaps in the next few weeks or months, if the predictions pan out. That is why it is more crucial than ever to be well-informed, current, and prepared. Are we about to witness a currency explosion? That is the question that still needs answering in 2025. As far as anyone can tell, we might be. No longer are the Iraqi dinar and the Vietnamese dong considered underdogs. These new forces are being supported by tangible reforms, expanding economies, and a growing sense of global optimism. Everything points upward, regardless of whether they get to total 60 and 42 or just ascend a lot. Being informed, educated, and prepared is the best course of action right now. If you enjoyed this update, you should subscribe to Iraqi Dinar News so you don't miss a week of insightful, unbiased, and entertaining coverage of the world's currencies. Keep watching because tomorrow might be the start of a whole new era in the world of finance.